Hello everyone. This is Chris. I'm with Elliott with Café, and welcome to this weekend edition of the Macro Café. We're not going to cover all the stuff that I usually do. We're just going to take a quick look at the S&P 500 and the NASDAQ to kind of tell you my view. But one thing I need to say before I keep going here with the video, if you're a bear, you might want to turn this off because I don't think you're going to like what I have to hear. So, if you're very, very sensitive to anybody kind of showing you any thing on the bullish side, then I don't think this video is for you. But if you want to look at the Elliott wave, and if you have the ability to change your mind and, go with the flow of the market, then, you're welcome to stay up here and go through my ramblings in here. So we've had a pretty strong close to the month and a pretty strong close to the week as well. The first 3 days of the week were pretty weak across the board, but then on Thursday and Friday the markets came back with a vengeance, and they were able to do some serious closes to the upside, and they're coming to attack those February highs and maybe even those August highs next. So we're taking a look at the S&P 500, a very simple chart, just a clean monthly chart in here. You could see how we came back, and I think I've showed it this week. There were several, candle clusters in here. If you look at the white ones, they were showing you that buyers are starting to come into the market. There was a period where, we've gotten rejected here at the end of the year in December. But then in January, the bulls starting to kind of come up with more of a show of force, and they continue to do so. So based on what I'm seeing in here, I think the bear market is done. We completed it in October, and, we're breaking above, and we're going to continue to move to the upside. And, even later this year, we could probably make new all-time highs. If not, if there's going to be, a little bit more, let's say, restrained, price action, restrained impulse, it's probably going to happen in 2024, but I don't see this market turning back to the downside. Take a look at the weekly time frames on the S&P 500. Again, we're looking at the 30-week. They're starting to push to the upside. We have a series of corrections, a pretty decent, hammer kind of coming after a rejection lower. They usually call this a hanging man, which is more of a bearish formation, but those appear only after you have strong impulses in a market. And, I would not necessarily consider this as being as such. I think this is the beginning of something larger, and it should continue back in here with an attack of these August 22 highs. Then quickly taking a look at the daily time frames, you can see how, Monday, Tuesday, Wednesday, we sold lower. I think a lot of bears here got excited. Oh my goodness, we have another rejection. It's a double top. It's this, that, and the other, and we're going to break to the downside. Well, the markets came back, and we've had, I think, the highest close since back in August, because this close back in here, even though we did not overtake the high from February, which was 412.10 on the spiders, 416.72, but we had a close of 415.20. If you look in here, the high and the close were 415.93. And the close here was 415.20. So we made a new closing high in regards with the February high. So to me, these are all extremely important developments. I think that is a corrective structure that came lower, and we should be pushing to the upside. All right, now quick look over at the NASDAQ, which I have the counts to show you here shortly. I mean, this looks even stronger. You have a nice rounding bottom out of here with bulls continuing to come strong in here. Again, I think the bearish, this is the largest correction we've seen, since 2009. Right, and it's run its course. It dropped like what even it was, like almost 40%, I think, the decline, right? 38, about 38% decline we've had in the NASDAQ in here. So I think we're done. Now taking a look at the weekly really quickly. Again, just a beautiful 1-2, and then I think we're gonna scream to the upside in here. We came back, retested the 150, retested the trend line as well. Take a look at the weekly time frames. This was as clean of a correction as they, usually come. Guys, when you look at the chart and you're trending upwards and you have a three-wave move, that it's with the trend, right? the biggest bet and the highest bet that you can take is that the trend will continue. Okay, and as scary as it looks when you are back into these levels, with a little bit of confirmation, you can rest assured, try to put the odds in your favor, and you can try to trade this to the upside because, if you have impulse correction, right, the next move is going to be to the upside. And this is what I was trying to, tell my members. I did here back in April 27. I said, listen, plus we're following this in, on the daily drips, all the counts on a daily basis. And we know kind of how the market, what our expectations are, what's the next moves and kind of what we're looking for in terms of targets, in terms of corrections, what the levels do we need to be careful about. And here I put one for the pro members. I said, look at this, just a basic multiple tail rejection. What are these tails? Well, these are buyers coming into the market when? After the correction is over or when it's starting to run its course. Okay, maybe this one did not convince me that much, although the bulls came in, but then you had several times trying to get back to the downside and they bought them all, right? Okay, what else you want? That's a big signal. Then, okay, you don't want to take that signal. We'll wait until this guy gets taken out and then you get into the market. But, correction, down, three-wave move with the direction of the trend. In my view, that is the signal that you want to see from a market. Then you climb back above the 20-day moving average and you accelerate and you make a closing high, obviously, way above the, this was, I think, at the end of March. February highs were taking, way below, and then we're going to attack these August highs, I think, next in the Qs. Take a look at the Dow Jones. This one, it's not that far from the all-time highs. I think we're 6-7% of the all-time highs in the Dow Jones. After you had on a monthly candle a huge, bullish engulfing out of here, with the correction and a hammer on the monthly time frames. Take a look at the weekly. What else you want from a three-way setback? Just beautiful textbook. ABC, WXY. However, I don't care about the internals of this guy. What I do care is that they came lower. They stopped right here. They started to give you signals that the market could return. Take them, right? Because it's an impulse and it's a three-wave move. But there are still a lot of people that think that this is, a bear rally, that we're going to collapse and the economy will go down and, we're going to get into the greatest depression. I'm sure there are fears like that out there, but that's not what the price is showing you. The price here is showing you that it wants to move to the upside. Okay. And when you have a three-wave move like that, after an impulse, after you finish the largest correction in a long time here, right, for about a year, you're coming down, right, and you're taking everybody to the cleaners, then you're coming and you're buying the market, and, who's buying this? Somebody is buying. Maybe not in the small caps, but the important charts, the important markets, the important stocks, right, are giving you, a signal here telling you that this market is about ready to go to the upside. So I'm going to listen to that. Right? And if I listen to that, my account listens to that. So this is a move, a corrective move, a three-way setback. You go up in a 1, 2, 3, 4. Maybe that's a 5-way move and it's going to be done. Maybe into the Fed meeting here coming shortly. Excuse the noise outside. And then, we're probably going to have a three-way setback and then we go at it again. Now, the problem and a lot of the arguments that the bears have, it's about the Russell, right? The stocks in the Russell, they're not participating. They're weak. What is this market doing in here? It's, this, fine, let them go lower. Okay, we'll see. We'll see what happens. But I do think that they're going to turn back as well. Okay, it's not the most bullish setup. It's hard to kind of count it on the bullish side, but it does not stop me from being bullish and looking to the upside. What if this is a flat? What if this is a 1 ABC and you're done? And that's a flat in 2 and then you're pushing higher. Right? If you're not thinking about it, you're not thinking about the other possibilities that are in the market. Yeah, it's easy to be bearish based on the setup in here, and some stocks even have broken lower. Not the entire IWM. Some of them have done it. Right? But even if you do, it might be a quick drop in here. You finish the correction and then you go back higher. All right. Remember, a lot of these stocks were already killed during 2022. So for these to get killed again, something bad has to happen. Well, the banking crisis did not take these guys down. What else is it going to be? The Fed is almost done raising rates. So I don't want to get into all that fundamental and argumentative discussion about, the Fed this and the money supply and the inflation and, I look at the price, I listen at the price. And, in 3 out of these 4 markets, are telling you bullish signs. So that's basically just a quick overall view of, and I did talk about last week about this in IWM. I mean, look at this, look at in here. I mean, here, right? They are buying it every time it comes back up into these levels. So what if that's a 1, A, B, C, and does this look like, what you're seeing in the Dow Jones Industrial? I think so. We just got to clear back the moving averages. Now, rest assured, if you get back above 178, 179 in IWM, you're going to move to the upside. That's my story. Okay, and then I don't want to get into the longer trends and, since 2009 and kind of how we touch the trend line and all that stuff. I talk about it a lot. But let's take a look at the wave counts because that's why we're here. So I'm just going to spend a little bit of time looking at the NASDAQ. So wave 1, in my view, wave 2 in here. It had all the chances it really wanted to go lower and create a much longer C wave, because that's what we were kind of waiting for when we were down on the bearish side. So, okay, fine, that's a 1, 2, or maybe an AB, and you're going lower in some kind of a Y wave, and you still got to go back, right? Remember, there's still people that are waiting for 3,200, 3,400 in the S&P 500, just because there you have a little bit better equality between the waves, just because the market looks better like that, just because, there's valuations that don't make sense, just because the market kind of has to listen to that. It doesn't. The moment it came back and it finished the move, it's basically showing you back in here that you are pushing higher. You broke a trend line that's been touched 4 times. This is not a crappy trend line that has only 2 touch points. It's got 1, 2, 3, 4 touch points. They tried here, went straight through, came back, kissed it, and we're off into the races. Look at this. 1, 2, 1, 2, 1, 2. Okay, it's aggressive. Yeah, it's aggressive. If you don't want to count it like that, count it in a 1, 2, 3, 4, 5. You have some kind of a leading diagonal. You might get a little bit of a pullback and then go back to the upside. Maybe the Fed on Wednesday, whenever they meet, throw something, to the market and they scare them again. And who knows, right? But I'm not going to trade based on that. I know what I'm seeing in here. I see a 1, 2, 3, 4, 5 waves. That's an impulsive move or a motive wave, right? Because impulses, they don't have overlaps, and motive waves can have overlaps because they could be diagonals. Now, there's a lot of people that watch my videos, and, a lot of electricians that are very, very sticklers for perfect rules and guidelines. And if this wave, it's a little bit higher and this is a little bit higher and all of that. But when you look at the diagonals, with the exception, I think, of the ending diagonal, the leading diagonals have a lot of debate about them. Okay, there's a lot of discussions about, who's right, who's wrong. There's no real specific documentation about how a leading diagonal should look. Okay, but what I do know is that if you count this guy from here, right, and you see that it's converging, it's a 1, 2, 3, 4. There's 5 waves in there. Okay, and you can converge them. And in my book, that is a leading diagonal. All right. Just because this wave 3 is slightly longer than wave 1, it does not mean that it doesn't fulfill the purpose of kind of how it looks. All right, and then you have a second wave setback, then you go up in an impulse again, you got a 3-wave correction, you go up in an impulse, you got a 3-wave correction. So if you want to be really aggressive, it's a 1, 2, 1, 2, 1, 2, and you're going to smash it to the upside, something that almost nobody expects. If you want to be more conservative, fine, 1, 2, 3, 4, 5, you're making maybe another high, although I don't know how, because this does not look like a 4th wave. This looks like a 2nd with a rip about to happen. Okay, but let's say that one more push up higher, and that's a 5th wave, and then that is a leading diagonal. Okay, you're going to come back towards 12K, you're going to correct back in here, and then you take it back up to the races, right? So there is a lot of room here for this to work in several ways. But to me, I think this is the way I choose to count this, right? And kind of what I'm seeing based on the bearishness, and then how people are not prepared for a rally in this market. This could be the most surprising thing that could happen here. All right, that this market would actually rip to the upside. So once we get above the August 16 highs, I think we're off into the races. Sure, you might find some resistance. It might pull back a little bit in here. We're going to watch the channel. We're going to monitor every single day, right? But the bears are starting to look arguments in here because they're going to bend over backwards and do all kind of mental gymnastics to come up with some kind of a corrective pattern in a 5-wave move. They're going to be saying, oh, that's an A, B, that's an X, and that's another A, that's a B, that's a C of a zigzag, this, that, and the other. You know, when the bear market finished back here and you're ready to rip to the upside. So, I mean, it's fine. I mean, yeah, you can go, and make this and scream this from this high to this low in some kind of an expanding diagonal, really? And then you're going to look at this as it being a B wave or a second wave, and then the biggest crash, you know, ever in the history of the market is coming after that? I mean, I'm not sure. After the Fed already raised rates from 0 to whatever we are, 5.2, 5.5% in a period of several months, and that's all they were able to do with the market. After you've had banking collapsing in your left and right, I mean, a couple of them, whatever, and then you had them in Europe, and Europe is making all-time highs, and France and Switzerland, and, you know, the other markets out there outside the US look really bullish, and we're looking for a crash in the market just because we do not want to change our mind on the fact that, you know, that this is turning over to the upside. I mean, look at this, right? There's no more lows being made in here. There's actually lower highs and higher highs. So, I'm sorry, higher lows and higher highs. So anyway, I might be blind. I might not see, you know, the other side, right? And listen, if you're breaking below, if you're starting to kind of get back below this green line in here, in the NASDAQ, I'll gladly join the bear side. But until then, I don't want to hear it, okay? Because there's no evidence in here that that's a bearish move. This is bullish. From October till right now, this is a series of higher highs and higher lows in a bullish pattern with corrections that are being bought. So, call it conviction, blindness, you know, whatever you want, but that's kind of what I'm at with this guy. So this is my macro review for today. Hopefully it helps. And, you know, I'm curious to hear about your comments and what you think. And, you know, come at me, have at it. I don't mind. You know, I want to hear some good arguments in there. But thanks for watching as always. Don't forget to come and, you know, give us a try. Visit me on, you know, come up here. You know, this is a pro service right here. You can check us out in here. This is, you know, this is not cheap, but, you know, if you want to give it a month or whatever, you know, you're gonna find a lot more of what I'm saying here in here as well, through active positions, portfolio trades, you know, a lot of different stuff. And then if you want to go something more basic, it's Elliot with Café the Daily Trip, and where I'm following all the counts on the S&P, NASDAQ, you know, everything in between on a daily basis. So thank you guys for watching, and I'll talk to you later. Bye bye.